Good morning and welcome to NYSE TV Live, everyone. I'm Kristen Scholler here in studio above the New York Stock Exchange trading floor. Well, as investors have, economic data is now back in focus for investors. In fact, this week brings several reports that could show the economy is on solid ground. Earlier this morning, we got the Consumer Price Index data, and I'll cover more of that in just a moment. But tomorrow we'll get the latest read on wholesale prices, the cost that businesses pay, and then, of course, retail sales on Friday. So let's take a look at what is on tap in today's show. We'll dive into the latest inflation data, as I mentioned earlier, with traders assessing the path forward for interest rates and equity prices. Plus, Mastercard is here to celebrate the opening bell at the stock exchange, and its Senior Vice President of Global FinTech Payments will join us on the trading floor after the market opens. Well, with FinTech in focus, FinTech TV's founder, Vince Molinari, is going to join me in studio to talk about the latest trends in this space. And getting back to our main story, the October CPI report, Consumer Price Index. About a half hour ago, the Bureau of Labor Statistics released the latest data about the state of inflation in the U.S. Headline CPI year on year was up 2.6%, in line with estimates, a hair higher than what we saw in September, but still as expected. And on a month-by-month basis, we saw consumer prices, the pace of those price gains rise by about 0.2%. Well, when we look at the core number, that excludes the volatile food and energy prices and is a closely watched number on Wall Street. That was up 3.3% from the same time a year ago, in line with estimates. And on a month-over-month basis, it rose by 0.3%. So with inflation in focus, I do want to bring in Ben Emmons. He's a founder and chief investment officer at FedWatch Advisors. Ben, it's great to have you on the show this morning. And what is your reaction to today's inflation data?
Yeah, good morning, and thank you very much for having me on. It's certainly not a surprise number, but it is a number that shows the stickiness of inflation that people are worried about. And just listening to Neil Kashkari on a different network, he does point to that they made a lot of progress, but it seems to be stalling out the progress. And that core month-over-month core number that you just mentioned, the 0.3, it doesn't seem to be budging. And if you analyze that number, it does show that we're actually in a sort of a leveling out inflation number that seems to be higher than where we normally are. If you then look back at surveys that recently came out, consumers have anxiety about inflation. There's still this very elevated anxiety. So as we're going into the new phase with the economy as of next year, with everything that comes at the economy in terms of what could happen with tariffs and whatnot, I think the anxiety of inflation remains high, why these core measures remain higher. So we do have to be on guard, because if that does turn higher, the Fed will have to ratchet back any type of easing and become more hawkish or more neutral, at least in policy.
Do you think that this changes the Fed's path forward in terms of its next and final meeting this year in December, with the expectation that it would cut rates by another 0.25 percentage point?
I think this number gives the Fed a lot of optionality to say, we could hold off a meeting just simply because we want to see how this plays out, this data. It may be, once again, a statistical issue and not necessarily fundamental, but it does sound though from the press conference with Jay Powell and just now interviews with Neil Kashkari that they certainly want to make the decision that they could stay on hold. The real question is if they stay on hold in December, if that becomes a longer hold in policy. And I think we're not yet at that cusp here with this particular data point. But it does point to the idea that the economy is strengthening, and it may lead the Fed ultimately to a position to stay on hold for some period of time.
How do could the election results, Ben, change the dynamic for inflation going forward? Of course, we have to wait to see how things play out in D.C. as to whether or not Trump's campaign promises come to fruition. But one of the items that he pledged was huge tariffs if he is elected.
Yeah, that is the uncertainty, I think, coming out of the election. We had a lot of optimism about the economy, and you're seeing a Congress being potentially Republican, with White House Republican. The markets have extrapolated from that, like there will not be any type of political gridlock to get effective measures like tax cuts implemented, and therefore that would affect the economy positively. But the tariff story is different, and we know that will be done by executive orders, and we know these numbers are really high, and the markets try to assess if this is a one-time price shock that then flows off, like sort of ebbs down, or that this becomes more protracted inflation into next year. And that really, I think, depends on how the economy ultimately absorbs a large tariff shock, so to speak. So I think it's still out there in terms of uncertainty what the tariffs could do. And I think for inflation, as I mentioned, there's anxiety about inflation, which keeps inflation expectations higher. And that in itself would likely keep CPI on a more elevated level going into the next year than where we were pre-pandemic.
Fed Chair Jerome Powell was asked last week in the Fed's routine press conference following its latest interest rate decision as to whether or not he had plans to resign. Of course, Trump, while in office the first time, did appoint him to this role as Fed chair in early 2018. But there are some questions as to whether or not President Trump, soon to be President Trump, would want a Jerome Powell still in that role. What is your take?
Yeah, so it's interesting how Powell responded to it, right? He obviously has to take a position to say we're an independent Fed, right? So there's not going to be any type of decision making over the chair of the Fed, politically for that matter, other than Congress itself. And there has to be a real reason for him to be demoted or removed from that position. Just like with any role that you take in a company, if you could be removed for cause. So it's the same thing for the Fed chair. I think on the other hand, people are going to start looking at who will be the next Fed chair. There's some thoughts out from Trump, sort of like new potentially appointees to basically come up with a shadow chair, as they say. So someone that gets appointed ahead of when Powell term ends. And that, I think, is a really interesting dynamic, because if that were to happen, that shadow chair, so to speak, will start to voice his opinions about a policy and how markets will then take more cue from the shadow chair versus the actual chair. So that can maybe be an interesting dynamic next year. We'll see. I think for now it's more like Powell's answers were very clear and resolute, and he's going to stay on and he's going to fulfill his term and do the right thing for the economy.
And how does that impact the dynamic for rates going forward, Ben?
I think for now that expectations are just following what the Fed currently is saying. And so as you can tell, like we get a bit better data out, and the Fed starts to sort of signaling that they may be on hold in December, and we immediately see these rate cuts being priced out, just following the data, following what the Fed is saying. So that is where we are currently. If we do get a dynamic next year that's different, where Jerome Powell's chair will be not only ending, but there will be someone else in the mix there that has an opinion about it, then expectations could be affected by that. In the first Trump term, President Trump's tweets had a significant impact on the expectations in the Fed funds futures market. There's studies out on that. So I do think that some of those elements come back. At this moment, however, it's really data-driven what the Fed's saying. So I think we're in for potentially these rate cuts to be a bit priced out further from here, and that we're going to have a little bit higher yields for now until the White House starts its administration in January.
All right, Ben Emmons, founder and CEO of FedWatch Advisors. Ben, thank you so much for joining, and we'll check back in with Ben after the opening bell. All right, well, coming up, the Bitcoin rally reached a new milestone Tuesday afternoon. We'll have more on that story, where the cryptocurrency currently trades, and what is ahead for Bitcoin up next.
So, John, tell us a bit about the partnership you have with Santander and Openbank.
It's a Spanish man and it's a Spanish company. This is my only Spanish partnership. Santander has a long history with the game of golf, and being a professional golfer, it's a true honor to be a part of it. And then, well, we're here at the New York Stock Exchange for the opening, the soft launch of a new online bank here in the U.S., being Openbank.
Now, John, when deciding which brands you partner with, what factors do you consider?
I try to get brands that represent me in some kind of way, right? And trying to at least having the opportunity to partner with somebody from Spain, a family that grew up in northern Spain like myself, not the same city but close enough, that has a close history with the game of golf, I thought it was a no-brainer, right? They've also been involved in other sports like Formula One and many others. I think that was an easy choice, right? But I think every brand I've had, I try to see what their expertise is, what their motto is, and what they portray to the world, right? And that's what I try to link myself with. So my image in itself, or what is the name John, is either uplifted by those brands or related to those brands, right? And I try to be picky. Luckily, I've been able to have some great partners to join with and keep on going on those ventures.
Now, Santander is growing in the U.S. market, which is a journey you yourself are familiar with. Do you see any parallels between your own experience in the U.S. and what Santander is doing today?
There is a difference when you're playing in different parts of the world. The golf courses are different, the setting is different, right? So to be as complete a player as you can be, you have to play in all different environments. And coming to the US is a massive one, right? 3 of the 4 big majors are played in the US, all the big events are played in the US. So being able to come here.
Welcome back to NYSE TV Live, everyone. I'm Kristen Scholler here in studio. One of the biggest stories on Wall Street these past few weeks is the surge in Bitcoin. Pricing below $70,000 a token when the first polls closed on election night, we have seen this cryptocurrency skyrocket to brand new records. After briefly touching $90,000 during the day on Tuesday, it was pricing at about $89,500 a token when equity trading closed in the afternoon. We see Bitcoin currently hovering around that level as well. And joining me now with more is Alexander Bloom. He's the CEO of digital asset company 2Prime. Alexander, welcome to the show.
Thanks so much for having me.
It has been an astronomical rise for Bitcoin. Is it a good time to look at this cryptocurrency as an investment?
Yeah, I think especially if you treat it as an investment and not a speculative asset, Bitcoin's been a great investment for about 10 years. Yes, it's volatile, but as the regulatory environment is changing, a new political administration, it's being de-risked by the day. And yeah, it's moved up from 70 to 90K basically. Those kind of moves in Bitcoin's history are really not that surprising or unusual. And so Bitcoin's just doing what it's always done.
What are the pros or the underlying fundamentals that make this a long-term investment?
Yeah, I think, there's the fundamentals of Bitcoin. It's a scarce asset that is resistant to inflation. There's only going to be 21 million of them ever created. The rules and policy of how it's distributed are known and public. And it provides a utility function of transferring money in a way that regular bank or wire systems don't. In light of that, we also have a political environment that's changing where this stuff has been nearly regulated out of existence in the United States. And suddenly you have a political party with Bitcoin people influencing that administration that are saying pro-Bitcoin things. They want to make it in America. They want to create a US Bitcoin strategic reserve. And so the hard money fundamentals of Bitcoin are unchanged, which is what is good about it. And now the political environment's catching up to that.
So we had seen both candidates warm up to cryptocurrency in the final days of this particular race. But what about President Trump, incoming President Trump, makes it more attractive for this space?
Yes, I think in the last final minutes of the campaign, Harris was trying to court, specifically she was talking about protecting black crypto investors in her policy. The Republicans and Trump, others outside of Trump, have been talking about Bitcoin and trying to get pro-Bitcoin legislation for years, for multiple cycles of Congress. And so his proposal is to create a US Bitcoin strategic reserve, which would then spur a kind of collection arms race to hoard Bitcoin of other nations could be a massive game changer. And the fact that it's orchestrated, told in advance means other companies, individuals and nations can try to front run that activity by the US government. Reducing the regulation by enforcement from Gary Gensler and the SEC has been, if you're a US company trying to run a crypto company, it's been impossible to even know what the rules are. And so knowing that, I think there's going to be a more welcoming innovation environment in the US, allows for investment, allows for businesses to flourish. And then I think supporting Bitcoin miners that have been worried also about regulation or undue taxation to continue to expand the United States are all huge benefits.
Going back to Bitcoin as a strategic reserve to the United States, is that something that incoming President Trump can enact via an executive order, or would that need congressional approval?
So Listen, I'm not in Congress, I'm not a lawyer, but I think the Bitcoin that the US has already confiscated, they have the ability to appropriate and say this is a policy through executive order we're going to hold on to. Cynthia Loomis in the Senate has proposed legislation to buy 1 million Bitcoin over the next 5 years, and I think that kind of policy of buying more Bitcoin intentionally, I think would require legislation, but we have a Republican House and Senate that may have the will to get that done.
What caused the change in tide? We had seen former President Trump, when he was in office the first time, really not necessarily be a crypto friend, and some of that perhaps could be because of national security concerns. What was the changing point?
So I think two things come to mind. One is, BlackRock, the biggest asset manager in the world, had created an ETF that not only gave everybody else kind of legitimate cover to say this is a worthwhile thing to look at, but it's been enormously successful. I think they just reached 40 billion in AUM today, the fastest to ever reach that size. So I think that on the financial side has given cover, and then on the political side, as Bitcoin price goes up, political influence for the industry has also gone up. The best funded PAC in this last election was Fairshake, which is a pro-crypto PAC supporting both sides of the aisle. And really, there's nobody that's going to not vote for you because you're for crypto. And so there's really no downside to being pro-crypto and supporting this United States. And so I think just the political influence has amassed for companies like Coinbase and others to fund these PACs, and there's no downside to really being for it except for more funding and more votes.
So we've talked big picture, Alexander. What are the storylines in crypto that you are following?
Yeah, so, for me, I think there's a lot of DeFi companies like Uniswap Labs, for example, that have had legal issues with the SEC, and they're being regulated basically like financial firms, even though they're software companies. And so I think companies like that are going to have much more room to breathe and innovate in the United States, and we'll get actual regulation out of the Houses, Congress, and Senate that will allow people to know, what am I actually allowed to do here? I think everybody wants to comply with the rules. Beyond that, I think there's a number of blockchain companies, like my friend Deborah runs a company called HealthPass One that's trying to put healthcare records on the blockchain, and I think that there's political will to allow companies like that to change the way we organize data and who has power with that data in our country.
Alexander, it's great to have you on the show. Thank you so much for joining. We'll see if Bitcoin reaches 100,000 by the end of the week. What do you think?
It could definitely happen.
It could happen. I know, it's so true. Alexander Bloom is the CEO of 2Prime. Alexander, thank you.
Thank you.
All right, well, after the break, my colleague Trinity Chavez is going to be speaking with the head of marketing, business, and product strategy at a tech firm called Solidigm about the company's latest announcement. Stay with us.
Since we last talked, I know you have a major announcement. You just made the largest deal in the ASPM space. So talk to me.
Application Security Posture Management market, yes.
Yes. And I understand that it's with an NYSE listed company. We can't say the name.
Fortune 10.
Yes, Fortune 10 company. Tell me about this deal.
First and foremost, this is a deal that changes startups, okay? And we're super, super excited about it. And why they decided to partner with us for 3 years, very large deal, was technology that we developed. We actually helped them automate all their security risk assessment questionnaires, build a real-time software inventory, and prioritize, remediate, and prevent risks before they get to the cloud.
Let's talk about how Apiro recently launched the risk detection at the design phase. Can you talk to me more about this and how earlier detection in the software development of these kind of problems will help enhance the security outcome for businesses?
Based on NIST, the cost of fixing a defect at runtime when it reaches to the cloud, 100x more than in the design phase. So what we did, we developed our own private LLM model that scans every feature requests that gets into the development lifecycle. And automatically, we generate threat modeling, stories, mitigations before one line of code is written.
I do want to talk to you about a new product that I know that you are going to be unveiling soon. Can you tell me more about it?
I can't share all the details, but I will say the following. We're using the Apiro deep code analysis technology to identify our software architecture. The next phase is to visualize your software architecture in a very, very interesting way. It's like a living and breathing organism. It changes every day. So you need to visualize it to help developers write.
Welcome back to NYSE TV Live, everyone. I'm Kristen Scholler. Well, as Mastercard makes its way to the trading floor and eventually that opening bell podium, I do want to bring in my colleague Trinity Chavez on the floor with another company making some big news. Good morning, Trinity.
Good morning, Kristen. That's right. Solidigm has introduced a groundbreaking new product designed to enhance efficiency, reduce energy consumption, and power the next-gen business applications. Here to discuss their latest announcement and what it means for the future of data storage and AI is Greg Mattson. He is the head of marketing, business, and product strategy leader at Solidigm. Good morning.
Good morning, Chris. Oh, sorry.
I know, Kristen, Trinity, we get it all the time. Don't worry. No, that's okay. So tell us about your new announcement.
Well, so Solidigm is a leading provider of data storage products called solid-state drives. And yesterday we launched the world's highest capacity solid-state drive at 122 terabytes.
Tell us more about it. What exactly does this mean, though, for the broader data ecosystem?
So data storage products are enabling higher amounts of data to be used in applications like high-frequency trading, AI, and most of the grounds-up data centers being built by the leaders in AI today are moving away from traditional hard drive-based storage towards solid-state storage. And these products, especially high-capacity products, reduce power consumption, improve performance, and improve GPU utilization within AI systems.
So let me take a look at that again. Talk to me about who your consumer is, who is your customer, who is going to want to purchase this product?
Well, again, the leaders in AI today. So anyone building a greenfield data center for AI, large cloud computing customers, so the biggest hyperscalers in the world, as well as the storage providers like the storage OEMs in the United States that sell storage to the AI ecosystem.
Can you talk more broadly about how this product differentiates itself from other products that are currently on the market?
Yes. So by being so big, 122 terabytes, it's about 4 times bigger than the largest hard disk drive, which is the historically the most used technology for data storage in the world. About 90% of the world's data is stored on hard disk drives, and by deploying solid-state drives, especially high-capacity solid-state drives at scale, you can reduce storage power by over 80%. And as you read about almost every day, that AI is putting big impacts on the power infrastructure in data centers and power infrastructure in general. And by 2030, we expect data centers to consume roughly 10% or more of the world's power. And so by reducing storage power, you can actually help us reduce the overall data center power worldwide.
Can you give me a few examples on how this new technology will help businesses operate more efficiently and effectively by using less power?
Yes. So today, when building out a new data center, you're building out a constraint to what your power allocation is by the grid, and by utilizing this drive, you can actually you could improve the amount of compute and processing power that you get within a data center by utilizing lower power and higher density SSDs.
What is the value of this new technology when it comes to AI?
As you know, GPU investments are extremely expensive, and downtime is very, very expensive and reduces the ROI on those incredible investments in GPUs. These solid-state drives help provide data more real-time to the GPUs, keep uptime higher, and also allow for more GPUs to be deployed at scale within the data center. Roughly, at scale for a 50 megawatt data center, for example, you could deploy 50% more GPUs in the data center if you used 100% high-capacity solid-state storage.
And you're here at the New York Stock Exchange, the epicenter of global financial markets. We have an investor-based audience. Why was it important for you to come on the show today to share this news?
Well, we wanted to highlight that firms like NYSE and financial trading in general utilize flash-based storage, which is what we sell, and are adopting these high-capacity SSDs in their trading systems, both high-frequency trading systems, matching systems, and back-end storage for those systems.
Amazing. Well, we appreciate you coming on the show, Greg, to share this news, and we look forward to your continued success. Congratulations.
Thank you, Trinity. I appreciate it.
Take care. Now we are just a few moments away from opening up the U.S. equity markets and watching Mastercard ring that opening bell, but we're going to take a quick commercial break, so don't go anywhere.
Brett, we're here at the New York Stock Exchange. You're here with the Startup Challenge by Snowflake.
Yes.
So tell me, what were your key takeaways from this competition, and how do you see these insights influencing Big Geo's journey forward?
It was incredible being down there for the Snowflake Startup Competition. It was really encouraging to see where they're going with their ecosystem, and what they're doing with native apps specifically is where we're kind of going to market with them. And the support network for me was the biggest takeaway. It was once we met with them and we were like, we're going to work together, it was just everybody piled in and we got the job done. So I was very encouraged, and I know Brent can speak for that as well. It was knowing that we picked the right ecosystem to go to market with. Snowflake was that for us.
Now, Brent, the data center and cloud landscape is evolving rapidly. How does Big Geo's technology align with the future of data centers? And what role do you envision for your company in this transformation?
It's an incredible technology for the data center space. I mean, we're having these conversations on a daily basis with some of the world's largest hyperscalers. Our technology sits right up against, it's built on first principles solutions from the ground up to increase performance at the data center. So we're looking at this technology as a way to reduce the amount of electricity consumption for data centers when it comes to geospatial performance, which is vastly becoming or quickly becoming one of the largest computing workloads at the data centers. So it's a very important technology to align with our hyperscaler partners and give them more, save them on electricity so they can spend that on artificial intelligence. So,
All right, now, Brett, we're here at the New York Stock Exchange.
It's
You're
awesome.
on the trading floor.
It's awesome. I've seen all the movies.
Well, tell me, how does it feel to be here? And how does this experience align with Big Geo's goals and vision?
Well, first of all, it's great.
Welcome back to NYSE TV Live, everyone. I'm Kristen Scholler here in studio above the trading floor. We are minutes away from today's opening bell, and stocks set for a mixed open, taking a breather certainly after what has been a record run for the major indexes truly this year, but also after that certainty following the presidential election last week. Markets crave certainty. We got that with the decisive victory, no contested results. And we also got that this morning, in fact, with the inflation data coming in line with expectations. We did see consumer prices rise 0.2% in October from September, and up 2.6% in October from the same time a year ago. The core consumer price index was a little bit hotter, up 0.3% month on month in October, and 3.3% from the same time a year ago. That strips out those volatile food and energy costs. Well, NYSE listed payments giant Mastercard is set to ring the opening bell today to open the equity markets. And the company is here to celebrate a decade of StartPath, which is its startup engagement program. Trinity Chavez is on the floor with more. Trinity, what's on tap in your discussion with today's bell ringer, Sabrina Thorano-Libby?
Thanks, Kristen. Yeah, I just want to point out that was a trader. Again, this is an active trading floor, so we might see a few traders from time to time zipping past our live shot here as we get ready to open up the U.S. equity markets. But, I do want to talk about Mastercard because I am going to be interviewing Sabrina in just a little bit. So Mastercard is also making news yesterday when it announced the business launch of its Biz 360 solution. Now, this product is designed to provide small businesses with simplified ways to manage crucial aspects of running and growing a business. It also aims to streamline a business's daily operation while integrating existing digital tools that these businesses already have. So, we're going to be talking about all of that and more with Sabrina a little bit later on in the show, Kristen, when we open up the U.S. equity markets and, capture all the excitement that's unraveling on the floor. You probably noticed the crowd just building up behind me. We have about 100 people from Mastercard, supporters, friends, colleagues, just here to witness Mastercard ring that opening bell in just about 40 seconds.
Trinity, that's exactly right. I'm looking forward to that interview that you'll have with Mastercard a little bit later after the opening bell. And as we await the official U.S. market open, stocks still within record high territory. We did see a bit of a loss yesterday in the major indexes, but this is very natural consolidation again after what has been a very strong run. The question going forward is, how will incoming President Trump's economic policies shape the equity markets and corporate earnings going forward? We have some indication, of course, based on his campaign promises, and we'll see how that unfolds come January 20th. You're taking a live look at the podium here as we await that opening bell and get off to the races. Stocks and crypto near all-time highs. Let's take a listen to the opening bell. All right, we are officially off to the races here at the New York Stock Exchange. U.S. equity markets open for trade. You're just watching Mastercard celebrate the opening bell alongside NYSE President Lynn Martin on that podium. And Mastercard will join Trinity Chavez on the floor in just a few minutes. Well, let's turn back to the major indexes here. We do see a mixed market, just a bit of a pause in this record run at the open. Rejoining me now is Ben Emmons. He's a founder and chief investment officer of FedWatch Advisors. Ben, thank you so much. And with kind of just a muted open here for stocks, what do you think investors need to digest as today's trade unfolds?
Yeah, I think as you mentioned, like the inflation data was in line, but it does show that stickiness. So they know, investors, that this Federal Reserve cannot just start cutting rates aggressively from here, which has been to an extent supportive of the market going into the election. But then we got to digest now that we're seeing all the appointees coming out really quick. Trump is really fast with that. And that will start shaping expectations about his policies into next year. The market traded the election as a really risk-on rally and really looked at the financials and consumer discretionary and small caps as the big winners. Tax cuts in particular, deregulation. That was the big theme right out of the election. But the next steps is really about trade policy and will companies really come back to the United States, invest in the United States as the Trump administration wants to? Those type of questions. So I do think that we're going to get some action in the industrials again, materials and staples that really reflect those type of themes. So I think right now it's muted because there's not much going on and the inflation data was not a surprise. But we're on our way to see what the policy of Trump will really be, and that will be the next stage.
Ben, we are having some audio issues, so we're going to take a quick break for our viewers and get that sorted just to make sure everything gets clear. That was Ben Emmons, founder and CIO of FedWatch Advisors. Again, we're off to the races. Mastercard just celebrating the opening bell moments ago, and in a few minutes' time, we'll be joined by the bell ringer of this global payments giant. So stay with us. We'll see you on the other side.
What you need is the commitment of all the employees that it's a priority, that we value culture, that it's a differentiator, that it helps us better support our partners and our customers. And I think all 20,000 people truly believe that. And so we're focused on it. But you have to be willing to change too.
Yeah.
And, that's always one of the challenging parts. When you think you have a great culture, it's easy to say, okay, let's just not break it.
Yeah.
But if you just say that, you say, let's just not break it, okay, then you're not evolving, right? And the world around us is changing every day. And you have to respond and react to that. And that means you have to do that for the business and respond to those external dynamics, but it means you have to do it for the culture as well.
Yeah.
We've been through a very difficult few years as a country, and that means that you need to support your employees differently given those circumstances. But I'll tell you, it's really important to listen to that cohort because their needs and the pressure that they're under is very different.
Yeah.
And that's where I think, we add a lot of value. And we add a lot of value to those partners, even outside of the credit program. Like we can actually help them on other topics, HR, finance, other things that we do where we have a more established process will help our partners. And we do that just in the spirit of partnership. But it means a lot to that group because they do have a totally different set of demands. And one of the things we did in the reorganization is we realized that a lot of what they need and a lot of what we needed to do to support our partners was common across industries. The customer experience has never been more important than it is right now. There is very little friction.
Welcome back to NYSE TV Live, everyone. I'm Christine Scholler here in studio. We are off to the races. The stock market open for trade right near record highs for the major indexes still. Earnings season continues to roll on. We are still in peak reporting season. Many of these companies exceeding expectations. On top of that, economic data coming in line with expectations and showing a still solid economy. Mastercard was just ringing the opening bell here at the New York Stock Exchange. And as I teased earlier, my colleague Trinity Chavez is going to be joined by the head of Mastercard's FinTech program, the SVP, Sabrina, as I mentioned earlier, in just a few minutes when she makes her way down from that opening bell podium. Trinity, you mentioned earlier that I think at least 100 people are here today to celebrate this opening bell. What is this scene on the floor?
Yeah, right now, as you can see just right behind me, we are on Mad Money set. This is where Jim Cramer films his show weekly here on the New York Stock Exchange trading floor. Everybody is gathering here as Mastercard's branding is all over the set, trying to utilize this opportunity to really capture this moment, their celebration today at the New York Stock Exchange with the photo opportunity, of course. About 120 or so people are behind me right in front of CNBC set underneath the bell podium. Again, we see a lot of people in red and yellow, as myself included, here to represent Mastercard as they make their way down from that bell podium. Actually, I think I'm getting images right now of Sabrina, again, who I can bring in just a moment. I think that she's ready here. I'm getting a cue. Hi, Sabrina. How are you?
Great. How are you? Thank you so much for having me.
It's a pleasure to have you. And you're fresh off of the bell podium. You just opened up the U.S. equity markets here in celebration with Mastercard. Talk to me about how you are feeling in this moment.
So excited. So proud of our team and our organization. This is actually a really powerful day for Mastercard because we're celebrating 10 years of a team called StarPath, which is Mastercard's startup engagement team helping high potential fintech scale by providing them curated and bespoke access to our network. So great day for Mastercard to celebrate this and absolutely honored to represent us.
And this is fresh off the heels of your news announcement just yesterday talking about Big 360 platform. Tell our viewers a little bit more about this.
Yeah, absolutely. So Biz 360 is a platform that is designed to help small businesses address some of their most critical challenges in running and scaling their businesses. So it's really helping them digitize and unify all of the different assets that's required to make them successful. So with Biz 360, we're proud to bring it to market in the US and soon to be globally. And it's actually powered by a StartPath portfolio company. So a company that's worked with us since 2020, Vcita, is one of the partners that we leveraged in bringing this to market.
What do you think will make Biz 360 so valuable to small businesses?
So one of the things that we've learned about small businesses is that in order to remain competitive and relevant in today's economy, they really need digital solutions to help them be successful. The problem is managing so many different digital partners can be cumbersome and confusing for small business owners. So what Biz 360 is really endeavoring to do is provide them a one-stop shop of all of these different solutions to make it much easier for them to focus on what matters, running and scaling their own businesses.
And I do want to pull up some facts right here. According to the U.S. Chamber of Commerce report, your team cited in its newest news release, 25% of small business owners are burdened by using 6 different platforms daily. Was this shocking to you throughout this research? And what were your key takeaways?
Yeah, absolutely. 6 different platforms for a small business owner, again, is very confusing and can be super cumbersome when all they're trying to do is keep the lights on, sell their product, and really address the needs of their own customers. So it was a really powerful statistics, but that's really what Business 360 is trying to solve for Mastercard, unifying that experience for those small businesses so it's a one-stop shop for them to deal with all of those different vendors in one place.
Talk to me more about your plans for 2025 and your plans to expand this platform then.
So for 2025, we're really going to focus on bringing Biz 360 to new markets around the globe and then continue to augment the platform with new features and functionalities as we continue to observe the needs of small businesses changing.
Great, and we have about 40 seconds left here, so I do want to talk to you about the evolution of AI and transformative technologies and how you're integrating these technologies into your bottom line. Can you tell me more about that?
Yeah, absolutely. So, it's a really exciting time to be in this space, and businesses of all sizes really need to make sure that they're preparing and readying themselves for these new technologies like open banking technologies, AI technologies, data technologies. And we think Mastercard is really well positioned to do just that with programs like StarPath, which already have programs set up to address these new types of technologies, but other business teams that are really focused on investing in these spaces.
Fantastic. Sabrina, thank you so much again for joining us. It's a pleasure having you on the show.
So much. It was a really great pleasure of mine too.
Thank you. Now I'm going to send things back over to Kristen in studio.
Trinity, thank you. All right, well, as we continue our coverage of the stock market open for trade, I want to bring back in Ben Emmons. He's the founder and CIO of FedWatch Advisors. Ben, hopefully we were able to smooth out these audio issues. I want to go back to our earlier discussion in terms of how investors should be looking at this market, especially as it comes to rates and inflation.
Yeah, as you mentioned, the inflation data was not a surprise, but it shows that stickiness. And the warning sign from that is that as the economy potentially takes off from here further, as Trump implements his tax policy as well as trade policy, that inflation could go up higher. And that I think is the risk to markets, because that leads to a Federal Reserve not only going to neutral, but having to rethink their policy path altogether. On the other hand, as you can tell from the election, post-election, a lot of enthusiasm about that we're having a Congress that's Republican, and that therefore, sweeping tax cuts will take place and it lifts the economy. At the same time, it's really about what will happen next with tariffs and what will happen with particularly American companies coming back onshore, what the Trump administration is looking for. So I think this is an environment where the economy will stay strong and where the markets will be very enthusiastic what's ahead of it.
Interesting. So, Ben, I am curious in terms of what we expect from central bankers around the world. We had seen actually the ECB, the European Central Bank, cut rates ahead of the Fed. How does this dynamic play out in your purview? I think our connection with Ben, unfortunately, is a little bit spotty there, but we do appreciate his time. That was Ben Emmons, founder and Chief Investment Officer of FedWatch Advisors. Of course, we will continue to follow this storyline as it is a major force still driving the market. Well, the fintech industry is in focus, not only for businesses, but consumers as well, as people prepare their holiday shopping lists. We'll have more on this when we come back. Stay with us.
So we're not following a cuisine, we're actually really leverage the culinary art form of churrasco, which is very traditional Southern Brazilian cuisine. We've been doing it for 45 years. So you're right, we only have 72 restaurants in America, but 96 globally. But our whole essence of our brand is about scaling the authentic culinary art form that we know our guests love around the world.
When it comes to cuisine, there's many different trends out there, right? Especially as people are more health conscious these days. So how are you keeping up with these trends, but still being true to your brand?
What we love about it is everything we serve is nutrient dense and good for you. So it's up to you and your diet and how you like to dine, but we've done that for 45 years. What's exciting is our innovation around that is even getting better. We just rolled out whole brand Zeno seafood, so we're just now beginning the fresh seafood platform, and we're really excited about that.
Ooh, that sounds delicious. We're going to have to try it when you open up your new restaurant, just a block or two away?
That's right.
Yeah, talk to me about when that's going to be opening.
So we're opening by probably like middle of December, but it's World Trade Center, really excited. So it's our second one in Manhattan. We have one in Midtown. It's 18,000 square foot. The one in the World Trade Center is ground level. It will be about 5,000 square foot, so really excited to open that. Can't wait to host you there.
Now, you've experienced significant growth in recent years. We talked about over 90 restaurants worldwide, over 70 here in the United States. What would you attribute your success to, and how do you think you're going to continue this momentum?
We scale our culture first by really investing in our people. A lot of training, because this is an art form that is unique to us. We're the category leader in it, and we are scaling it globally. So when you think about how to do it well, to keep the authenticity, we focus on our human capital pipeline first. Now we have visibility of 3 years of sites ahead of us because we have 3 years of people, I would say talent ready to do it.
Welcome back to NYSE TV Live, everyone. I'm Kristen Scholler here in studio. Well, as Mastercard announces its latest fintech initiative, I want to bring in fintech.tv founder and CEO Vince Molinari to break down some of the major storylines in this space. Our resident fintech expert. Vince, it's great to have you on the show.
Delighted to be here. What a great day with Mastercard announcing some of their new initiatives. Super day here, as always, at the New York Stock Exchange.
Absolutely. So let's talk about what is driving the fintech space right now from your purview.
Well, look, I think there's multiple factors. I think we've come off of the post-FTX chill, people de-risking, waiting to see what regulatory frameworks are going to be. And I think the realization that companies like Mastercard going into Visa, the traditional players, are here to stay. They're iterating, they're innovating, they're making investments in fintech, in fintech. They are acquiring, they're being relevant, and they're using the existing rails that they have to create new business lines.
I'm curious too, from your perspective, we've seen obviously cryptocurrency and I would say fintech in general get quite the boost in the wake of this certainty that we got out of the election results just last week. What do you think that means for consumer adoption of some of these programs?
Look, I think it's the multiplier effect. When we look at I'd say that the wins that are now in the sales with the new administration coming in, embracing technology and certainly embracing blockchain, digital transformation, crypto.
Yes.
And having what looks like will be more regulatory certainty with the anticipated change of Chair Gensler at the SEC. I think now consumers are sitting back and looking, hey, this thing of Web3 looks like it's really going to come to fruition. How is that going to engage the consumer? How is that going to create efficiency? How is that going to create loyalty with consumers to brands that they believe in and trust? And I think I keep pointing back to MasterCard today so appropriately, as they're already adopting token strategy, stablecoin within their system to create better experiences in the Web3 universe.
How does cybersecurity, protection of our identity and our assets on these digital platforms play in?
It is essential. It's not only essential for the consumer, for the corporation, for national security, as it's one of the biggest risks that are being focused on. How do we protect consumer identity information, because we see what happens with it all the time, unfortunately. So these big data breaches and having integration with AI. We're going to be talking about AI as a function of predictive analysis. How does that work in cybersecurity? It's a new day, and it's really exciting.
Yes, and we are talking a lot about cryptocurrency. It, alongside the equity market, has been on a tear in the wake of this certainty. And we'd actually seen both candidates actually warm up to it. But we know incoming President Trump with a much more friendlier stance to crypto these days. 100,000 by the end of the week on Bitcoin. Is it possible?
Well, I think what we see, everything is possible that we thought perhaps impossible or improbable. And we're touching just about 90,000 today, the last time I looked. So it could be there in a blink. It could be well beyond. It could take a retrenchment. But I think the indication that's coming through, and it goes to all the ETFs on the floor here around crypto, right? Consumers want it, investors want it. It's part of the mandate to stay, and I think it's onward and upward.
What do you think our viewers need to know about cryptocurrency?
For me, it's fundamentally about blockchain, the technology, cryptocurrency as being a use case within that. And look, it's here to stay, but you still have to be careful. There are the bellwethers like Bitcoin and, of course, Ethereum. But, when we get into the whole world of meme coins and a lot of promotion, you still have to be careful. But there's so much goodness within the technology and efficiencies that it's going to transform industries, no question.
I know your outlet, similar to NYSE TV, was at Money 2020 recently in Las Vegas, of course, talking about all of the technology really forging at the financial industry ahead. What were some of your outlet's takeaways from that event?
It is the groundswell. I think it was pre-election, the warming up to the anticipation of funding windows opening back up, the IPO window opening, the M&A activity, fintech access to capital, and that growth phase. So I think you saw people lining up in anticipation, and all of a sudden this groundswell, and post-election, we've seen it in pricing across the board, we've seen it in crypto. People are really engaged, and I think the outcomes from Money 2020 is the engagement levels are at all-time high.
What's on your horizon in this space?
Well, Kristen, I think it's great. I think it's, looking at how do we continue to bring education awareness? How do we demystify these subjects by having these conversations and getting that out to more audiences, which create engagement. It creates investors where they weren't before. It creates consumers in ways that they weren't consuming. So it is all about the education awareness and demystifying these subjects to us.
Vince Molinari, our friend down here on the trading floor. Vince is the founder and CEO of FinTech TV. Vince, always a pleasure. Thank you.
Thank you, Kristen. Wonderful to be here.
Great to see you. All right, well, speaking of FinTech, Mastercard celebrated its 10-year anniversary of its Start Path program earlier this morning. But another NYSE-listed company will be celebrating an anniversary of its own right here this afternoon. I want to bring in my colleague Trinity Chavez on the floor with more. Hi, Trinity.
Hi, Kristen. That's right. So JLL will be ringing the closing bell this afternoon as it celebrates its 25th anniversary of being listed here at the NYSE under the ticker symbol JLL. So to talk more about this is Mahir Shah. He is the CEO of JLL Technologies. Good morning.
Hello. Thank you for having me.
It's a pleasure to have you. I mean, it's always great. I mean, we're seeing green on the screen. Your share price is doing well. You're here for the closing bell. Talk to us more about why you came to the New York Stock Exchange to celebrate 25 years.
Yeah, I mean, it's an exciting day for us. In the last 25 years, we've truly innovated all of the real estate services that we offer. But really, what we're here for is the next 25 years. In our industry, we generate a lot of data about buildings, operational data, transactional data, and that makes it perfect for AI. And so what we're really trying to do is leverage all that data with our AI technology and tools to deliver value to our clients and really transform the industry.
Yeah, talk to me about that more, because your company's inception was in 1997. Obviously, you have been able to stay with the times and implement AI and transformative tech into your bottom line. Talk to me how you've seen how the broader industry has shifted and how you keep up with the space.
Yeah, so in terms of AI, we just launched recently JLL Falcon, which is our AI platform. And it's really a set of capabilities that enable us to build AI tools quickly. So we have 60 plus AI applications that we're working on as a company. For example, we recently talked about JLL GPT, which is our AI assistant. And it's used by 47,000 people across the company, and a third of them are using it on a weekly basis. And they're really reporting productivity gains based on that. So, and that's just the beginning. We see tremendous opportunity to take all that data in our space, use something like JLL GPT, and improve efficiency and deliver value and quick, fast results for our clients.
Commercial real estate is an area of major focus, obviously, for JLL. Do you see yourself shifting or expanding your reach at all?
No, our focus is really to take technology and AI and transform and innovate in our core business services. So another example is just yesterday we announced JLL Azara, also powered by JLL Falcon, which is our AI platform. And what we did there is it's our operations intelligence dashboard. So think about us managing hundreds of buildings for large corporates, and we take all that data, we put it through our AI platform, we can very quickly figure out insights for our clients to make real-time changes to manage their buildings in a more efficient way.
Sustainability is also another critical area of focus for JLL Technologies. Talk to me more about how you're implementing these strategy and ESG efforts into really meeting customer needs and demands.
Yeah, absolutely. So on sustainability, one of the key aspects is energy savings in buildings. And this is where AI also helps us, because these buildings generate a lot of data. We take that data, we use our AI tools, and then we figure out how to save energy in buildings, sometimes up to 20-30%.
Talk to me more about some of the biggest challenges and trends right now that you're seeing in this space and how you're addressing them.
Yeah, so three big challenges. One is data. You have to have your data organized, you have to have it accessible. And so we've invested significantly over the last few years in an enterprise data platform, which is enabling us to use data for AI. Another big challenge is training. I really highly recommend people want to leverage the AI platforms and tools that they've built to invest in training. For example, on JLL GPT, we have a feature called Skills, where our super users will create a prompt for everybody else, and then they'll all use it to get efficient.
Talk to me more about how JLL's approach differentiates itself and makes it unique to other competitors currently on the market.
You know, it started in 2019 when we created JLL Technologies, and we brought in a ton of technology talent. And because we had that talent, we were able to build JLL Falcon, we were able to launch JLL GPT, JLL Azar, and the 60 plus AI applications that we have. And so from now, going forward, we can really innovate and iterate on those given the talent that we have. And also there's a transformation mentality. All the people in our core business are real estate professionals are embracing AI because they realize that AI isn't about replacing them, it's actually about enhancing what they do for the benefit of our clients and our industry.
What's next for JLL?
So the next 25 years, as I said, is tremendously exciting. We're going to take all this technology, all the AI tools, and we're going to get more and more people at our company to use them. We're going to start showing insights into clients, whether it's helping clients figure out who should buy their buildings, or helping clients with insights that help them transform and manage how their real estate experience is for all their employees. Endless possibilities, and that's why I'm so excited about it.
We are at the end of 2024, but as we enter 2025, there's a lot of changes. There's a lot happening geopolitically. We are having a new administration set to take place. How are you positioning yourself in a way to continue this growth and momentum with JLL Technologies?
Yeah, so obviously when there's elections, there's uncertainty, but where we focus is we focus on the key policies that impact commercial real estate. For example, interest rates. So we watch interest rates very carefully because as interest rates go down, it helps our capital markets transactions. But actually that speaks to what we've been talking about. One of the things we do is we look at all this data that's generated through policies, changes, geopolitical, and from our own customers, and we take all that data and try to predict how real estate prices will go. For example, a few years ago, we bought Skyline AI, which is an AI company, and then we used that technology to build our capital markets platform that allows us to predict how building prices will go.
It's all about the technology, the AI, and also the team behind the dream.
Absolutely. It's all about the technology, the team, and how the people and the technology work together to deliver results for our clients.
Amazing, Mahir. It was a pleasure having you. We'll see you at the closing bell.
Thank you so much. Pleasure being here.
Take care. Now I want to bring back in my colleague, Kristen Scholler, who is in studio. Kristen.
Trinity, great conversation there. So much, of course, moving and shaking in this technology investing landscape. And we do see the major indexes melting a little bit higher in today's session. We had seen a bit of a breather for stocks, naturally, of course, after their record run yesterday. But again, this natural melt higher today, really fueled by an inline inflation report. We had seen 2 years of price gains cooling after what was a very high read of inflation back in the summer of 2022. Many of our viewers felt it at the grocery store and their rent prices, certainly even the price to buy a home. But as we see inflation ticking a little bit higher last month, the question is, what will the pace of price gains be ahead? That will dictate the Fed's interest rate policy, which we covered with Ben Emmons earlier in the show today, and how a new administration with new policies might impact that dynamic. Regardless, we see earnings exceeding expectations. That really is the backbone of the stock market gains, as well as economic data that does show the consumer and the economy on a solid footing. And with that, we are higher today in the session. It's going to do it for today's coverage on NYSE TV Live. I'm Kristen Scholler in studio at the Stock Exchange. Have a great day.
I'm reminded that it's not about the destination. It is truly about the journey.
My pleasure to greet you today from the center of the U.S. capital markets here at the New York Stock Exchange.
I want to just take a minute and not just talk to the people that are in the room, but I want to speak to the rest of the team around the globe. These are people that made this happen, and I know that there is no way we would be here if it wasn't for you.
Everyone at Flutter is proud to join such a distinguished list of companies on this great stock exchange.
Not many people get to do something big in this world, and we get to do something truly special.
This is such a wonderful place to both look back and look forward. Look how far we have come. I'm so optimistic about what lies ahead. It has been a privilege to be with you.